A significant drop in inflation as it falls to the lowest level in more than a year. And flying cleans up. We talk to the company hoping to make the UK's first green cross-country flight. Good afternoon. This is Business Live with me, Ian King. Tata Group, the Indian parent company of Jaguar Land Rover, has announced plans to build a £4 billion battery factory in the UK. The new plant, which is likely to be located near Bridgewater in Somerset, is expected to create 4,000 UK jobs and thousands more in the wider supply chain. The gigafactory is expected to begin supplying both JLR and Tata Motors from 2026. It's being billed as the biggest investment in the British automotive industry since Margaret Thatcher's government persuaded the Japanese car makers Nissan, Toyota and Honda to come to the UK in the 1980s. Well, joining me now is the Investment Minister, Lord Johnson. Lord Johnson, welcome to you. Obviously, very good news, but how much have we taxpayers stumped up in sweeteners?
Well, it's a very good question. I mean, I think that it's difficult for me to discuss the specifics at this stage because it's commercially sensitive. But what I will say is that over the last year or so, we've been getting a lot of questions about how are we responding to the Inflation Reduction Act in the US or the Green Deal in the EU. And the fact is we have for many years actually been running a very effective support structure. And a good example is the Automotive Transformation Fund, the Advanced Propulsion Centre and the Faraday Challenge, all of which have been putting hundreds of millions of pounds into projects around making sure that we have a really powerful EV car industry in the future. And this particular example is a very good case in point where we have, as part of our planned grant and support program, built it into to the Tata Gigafactory. So there's no great sudden need to find monies from sources which we haven't already outlined. The point is, this is part of a very clear strategy, and I'm delighted that today it's come to fruition. So we're celebrating a really major investment into the UK.
But just to press you on the figure, I mean, the figure of £500 million has been widely reported. You wouldn't disagree with that number?
Well, I'm not going to comment specifically on the figures, but just to give you an example, the Automotive Transformation Fund overall is about 800 million. The other support schemes I mentioned, I think collectively about 350 million pounds or so. So there's at least $1 billion in terms of government support. And it's very important, we're putting our money where our mouth is, not just to this very, very important project, but also with Nissan. We supported Ford, we supported Jaguar Land Rover in other ways, and many of the other car companies. So, the audience watching are going to be asking, what has the government been doing? We've been doing a huge amount. And actually, I'd say more than that. Winning this deal, firstly, it's fabulous news that Tata are investing in the UK, but it shows that our strategy is working. It was a complicated deal that's taken many months to come to fruition, and it proves, the government actually is able to execute very effectively. The Prime Minister, Grant Shapps, Kemi Badenoch, the Office for Investment, which was set up specifically to deliver these sorts of landmark investments, has come together and is celebrating this amazing success today.
Now, most industry experts believe that we'll need probably at least 2 more such gigafactories if we're going to have real scale in the UK. Is the government talking to any other potential customers right now?
Well, what's great is that this acts as a beacon moment, and there are a number of companies that have approached us on the back of, well, the rumours around the Tata Gigafactory, now the confirmation. So we're in a great position of actually talking to quite a few companies who want to come and base their gigafactories in the UK, and we've got some very interesting potential sites lined up. I know there's one Andy Street has in mind. Of course, there are other sites around the UK too. So yes, conversations are ongoing, and this is why the Tata announcement today is so important, because it confirms the UK's mission to build a really global car industry for the EV age.
You mentioned that the total fund available from the government is £800 million. I mean, I'm sorry to be pedantic and keep banging on about the numbers, but if you subtract 500 from that only leaves 300 potentially to support 2 more such factories, if that is the sort of scale that we need.
Well, as I say, I'm not able to do the maths in that way. As I say, we have to be quite commercially sensitive about the sorts of information we discuss, as you would expect us to be. There's a lot of due diligence around a complex project like this. But the point is people have said, what is the government doing to support the car industry? And how do we get back to our sort of 20-year ago peak car production levels? And we have put a lot of money into this industry. We've given it a huge amount of support, and very importantly, the execution support in terms of convincing Tata that the UK is where they want to be to build their international gigafactory operations.
There was a tweet this morning from Lord Macpherson, the former permanent secretary to the Treasury. He said, "I'm full of admiration for Tata's ability to extract ever higher rents from a desperate government. That's protectionism. It reduces competition and rewards incumbents at the expense of consumers and taxpayers. How do you respond to those comments?
Well, I have the greatest respect for Lord Macpherson. The fact is that I think your viewers might be a bit baffled. They're watching the celebration of the greatest investment in the auto industry, I think, in our history. We're building one of the biggest buildings ever to have been built in the history of this country. We have a world-class organisation that owns the marquee brand of the UK and Jaguar Land Rover, putting their confidence in the United Kingdom. And yes, the government's supporting them, and the public would expect that to be the case. That's the whole point of having a very powerful and focused strategy around turning us into a science and technology superpower and a growing economy. So I don't agree at all with his line of action. If anything, what we haven't done is been bounced by the Inflation Reduction Act or the European Green Deal into sort of excessive borrowing to fund some new wave of investment on behalf of the government. This is a strategic programme that's been going on for some years and has come to fruition today. And I'm very excited about that. And I'd like to see a few more people celebrating, frankly, the enormous work the government's done and the thousands of jobs that are going to be created, not just in the factory, but in the whole supply chain. And I've got a message earlier from Lord Woodley, another member of the House of Lords, but of course a famous advocate for investment into the car industry and a great union leader, who's just congratulating me on the work that we've been able to achieve, because he wants to see a strong car industry in this country going into the future, creating a whole new range of mobility and electric vehicles. And this is a landmark event to enable us to do that.
Just one more before I let you go, Lord Johnson. Obviously, the UK has a notoriously sclerotic planning system. Are we going to be able to get the planning approvals for these factories in time for them to get building these batteries as quickly as we would like?
That's always a fair question to make, and the fact is the whole point of organisations such as the Office for Investment and the Department for Business and Trade is to make sure that we are concierging these significant investments through the bureaucracy. But I'm absolutely optimistic that we can do this. And I would say just at the end, I've been really motivated by the extraordinary level of cooperation we've had from all the different agencies of the government. This is a complex project. Senior ministers, the Prime Minister, Grant Shapps and Kemi and so on, hugely important in getting us over the line, but also organisations such as the regulators, the planning commissioners, the National Grid and so on and so forth have all come together, seeing the national importance of this project and enabling it to take place and be announced today. So everyone's going to work together in partnership. Tata, the government, local authorities, and the people who are going to work in this amazing factory and supply the components to power us ahead as we become one of the premier car-producing nations in the world over the next 10 years.
Lord Johnson, appreciate you joining me today. Thank you.
Thank you very much.
Some other news stories for you now. And the annual rate of inflation fell by more than expected last month. It emerged today. The Office for National Statistics said that headline consumer price inflation dropped from 8.7% in May to 7.9% in June. That was the lowest reading since March last year, when the war in Ukraine sparked a surge in oil and commodity prices. It was significantly lower than the 8.2% that the market had been expecting. The ONS said the drop in inflation was due largely to falling motor fuel prices and a decline in energy costs compared with June last year. Meanwhile, core inflation, which is the rate of price rises that excludes food, alcohol, tobacco and energy, dropped from 7.1% to 6.9%. Stocks have risen on the news while the pound has fallen. The markets are now pricing in a lower interest rate rise from the Bank of England next month than previously expected. And I'll have more on the market reaction later on in the programme. National Grid said this morning that it is selling a further 20% stake in National Gas, its UK gas transmission and metering business. The £700 million sale to a consortium of long-term infrastructure investors led by Macquarie Asset Management comes after National Grid sold a 60% stake to the same buyer for £2.2 billion in January this year. National Grid said the sale was part of its strategy to pivot towards electricity and follows its acquisition of Western Power Distribution for £7.8 billion 2 years ago. The shares have risen by nearly 2%. And shares of Hargreaves Lansdown have risen by more than 7% after the UK's biggest retail investment platform reported better than expected trading during the final 3 months of its financial year. The Bristol-based company said it enjoyed net new business of £1.7 billion during the 3 months to the end of June. That was up 6% on the 3 months to the end of March. It said this was in no small part due to clients using their ISA and SIP tax allowances in the final days of the 2023 tax year and the start of the 2024 tax year. The company put on 13,000 net new clients during the period. That took it to a total of just over 1.8 million. A UK company seeking to pioneer hydrogen electric aviation said today it's completed the first initial prototype flight testing programme. Zero Avia said it had completed 10 flights using hydrogen in fuel cells to generate electricity, which is then used to power electric motors to turn the aircraft's propellers. Well, joining me now from Norway is the founder and chief executive of Zero Avia, Val Miftakov. Val, good to see you again today. What were you trying to establish with these latest test flights?
Great to see you as well. Thank you for having us. Yeah, this is the third flight testing campaign that the company has put together, and we just successfully completed the campaign. This is the full-size engine for our commercial aircraft, full-size aircraft that we have flown it in the beautiful Cotswolds. And the data from this flight test goes directly into the finalization of the design of the engine. The final design is getting submitted to the Civil Aviation Authority later this year. So we got all the data from all the flight characteristics, altitude, duration of flight, and maximum power, maximum speeds. We got all the predicted performance confirmed, and now the path is clear for certification.
I gather in the testbed aircraft, it was powered by a conventional engine on the right wing and on your new hydroelectric engine on the left-hand wing. When will you be doing a purely electric test?
We're hoping flight tests for the purely hydrogen electric next year. The reason we have done the testing in the twin with the dissimilar power sources is to assure safety of flight in the initial flight test campaign for this full-size engine.
And I gather you're hoping to run a flight at some point in 2025-26 between the UK and the Netherlands. Are you still on course to achieve that?
That is correct. So we're hoping to get entry into service for this size engine by end of 2025, with commercial flights starting at about the same time. And one of our top destinations, of course, is this flight that you mentioned between London area, hopefully, and Rotterdam area. And we have partnerships with the airports already on that side.
And how much has it cost you to reach this stage so far, and in terms of the investment?
Yeah, great question. So this is obviously aviation is a capital-intensive industry, and we're building engines, which is the capital-intensive part of the industry. The company has raised so far a little over $120 million in private investments, and some support from the UK government, of course, which is very great contribution to the success of this UK technology.
I've asked you this on the programme before, but for the benefit of viewers who may not have seen that interview, remind us who your chief investors are.
Yeah, so our main investors, the largest institutional shareholder is Breakthrough Energy Ventures, which is Bill Gates' fund. Then we have Amazon Climate Pledge Fund, so Amazon itself. Then we have a number of strategic investors, including Barclays, in fact, a bank, of course, UK, and IAG, International Aviation Group, so the parent of British Airways, and a number of others. 90% of our investment is coming from source outside of the UK, but the majority of the company is in the UK. So again, it's a great story for the UK government and UK science base and R&D.
And what's been happening in terms of your employee numbers since we last spoke? Are you still continuing to take on employees?
Absolutely. We're now at the company level, we're at a little over 250 people, and almost 200 of those are in the UK across 3 sites. They have a main business office in London. Our new fuel cell division is in Sandwich, Kent, and this is very exciting high temperature fuel cell technology, unique in the world. So we have the world-class team and the world's best technology there. And our primary flight test location is continuing to grow in Kemble, Cotswolds.
All right, Val, we have to leave it there, I'm afraid. Good to talk to you again this afternoon. Thank you.
Absolutely. Thank you very much.
Now, in a rare public appearance, the co-owner of Asda, Mohsin Issa, is giving evidence to the Commons Business and Trade Committee to discuss rising fuel prices. He's been taking questions from the chairman, Darren Jones. We can have a listen in.
Now look, I'm not an accountant, Mr. Issa, neither are you by the sounds of it, but when I looked at the accounts, it looked as if Asda was put into a loss-making position, was able to take money back from the taxpayer, paid out a dividend at the top of the company in a low-tax jurisdiction, and that seems to me that money's being taken out of the business whilst taking money back from the taxpayer and then not having as available income to reduce the cost of your petrol or your food prices or pay your wages properly to your staff. Do you agree with that assessment?
And confirm there's no dividends being taken out of Asda.
Well, at Bellis Acquisition Company level, there was £1.7 billion noted as dividend.
There's been no dividends taken out to shareholders.
Okay, I think you might need to write to me, Mr. Isa, with just the detailed answers to those questions. Are you happy to do that for me? Okay, thank you. And I don't know if you heard the testimony from the Competition and Markets Authority before, but they were essentially not very happy with the way that you and your colleagues engaged with their inquiry into petrol prices and said that if they could have charged you more than £60,000 because of your behaviour, they would have done. Do you have any reflections on that? That's
unfair, personally, because we sort of complied with all regulatory sort of requests.
You have nothing further to add?
Yeah,
Yeah.
can I just say that I'm personally not very happy at all with the responses from Mr. Isa, who is the co-owner of Asda. You've asked him some fairly simple questions, and unfortunately, Mr. Isa says he's not in a position to answer. He's a co-owner of Asda.
Yeah, I do struggle, Mr. Isa, with the point that Ian Lavery is making. I think you've been struggling to appoint a CEO and a chief financial officer as well. Why have you not been able to make those people appointed so they can come and answer our questions properly?
We have appointed a chief financial officer recently.
Why are they not here?
I was asked to come as CEO.
There was a discussion via my clerks whether the chief financial officer could come, and in the end they didn't come. You don't know anything about that?
Don't.
Okay, just to build on that point, and then I'll move on because I'm conscious of time. The Competition and Markets Authority beforehand told us that one of the reasons they were cross with Asda was because the people that you had sent to answer their questions couldn't answer their questions. But when you got involved, Mr. Isa, you were able to provide the information they needed at the last minute. So it seems to me that when it came to the Competition and Markets Authority, you were able to find the answers and provide them when your staff weren't. But today you're telling me you can't answer any of the questions I've put to you. What's the problem there?
You've asking me accountancy questions and structuring questions, which I don't have the detail to.
Okay, well, I look forward to your written response and correspondence afterwards.
I can't tell you how rare that is. We very, very seldom hear from Mohsin Issa, the co-owner of Asda. Of course, he and his brother bought the business in 2020 in partnership with TDR Capital. And the reason they were being questioned there by the Labour MPs, Darren Jones and Ian Lavery, is because the Competition and Markets Authority recently discovered that Asda's margins on its petrol sales trebled between 2019 and 2023. I suspect you'll read a lot about that in tomorrow morning's newspapers. Well, still to come here on Business Live, we're going to be having a look at how the markets have finished up this Wednesday afternoon. Don't go away.
I'm Mark Stone and I'm Sky's correspondent based here in Washington, D.C.
Well, the plan seems to be to head to the police station
where the policeman who fired the shots was based.
And everything, his memories is all gone.
I've witnessed the remarkable passion for politics here, but the anger too.
We have to get Trump out of the White House.
I'm playing devil's advocate.
You got your political agenda.
No, it's honestly...
God love you.
And beyond the United States, I report from around the world.
This is a town that is effectively encircled by the Russians.
We take you to the heart of stories that shape our planet.
I can hear now quite a few explosions in the distance here in Jerusalem.
What do you think of ISIS?
Everybody here, they know the truth of ISIS.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. It's like Emirates, it's like better.
Welcome back. Let me tell you what's been going on the markets this afternoon. And the pound fell sharply on this morning's inflation data. The markets are obviously pricing in now a lower peak for interest rates than previously thought. Sterling off 1% against the US dollar, off 0.75% against the euro. The single currency, meanwhile, off 0.25% against the greenback. On the equity market, stocks in Europe have finished the session in mixed territory, as you can see there, more or less unchanged in actual fact. Talking points today include Kering. The French luxury goods company finished up 7% in Paris amid reports it's bolstering its defences against a possible takeover approach. Well, here in London, the FTSE 100 has finished up by the best part of 2% there, 1.75%. Certainly broad-based rally led by the house builders, Barratt, Taylor Wimpey, Persimmon. All of them finished up by more than 6%. Elsewhere in the broader property sector, the commercial property groups Segro and Land Securities have also been well bid there. As you can see, Landsec's up nearly 7.75%. Now, obviously, hopes interest rates may not rise as rapidly as expected. Not too many fallers to mention in the FTSE this afternoon, but the Chilean copper miner Antofagasta has finished off more than 1.25% lower. That was on a production update earlier today. Outside the FTSE, the house builders also leading the way. Bellway up by nearly 6.5%. Crest Nicholson, look at that, 11.25% on the session. Meanwhile, over on Wall Street, all of the major indices have opened to the upside this afternoon. That's the S&P, the Dow Jones and the Nasdaq. The main talking point is Goldman Sachs. Its shares are ahead by some 1.5%, despite the bank reporting its worst quarterly profits since the second quarter of 2020. I think the revenue number came in ahead of expectations there. Meanwhile, the oil price is ahead today. That's on news of an expected drop in US crude inventories. A barrel of Brent crude will currently set you back $80 22 cents a barrel, up 0.75%. Well, joining me now is Matthew Wright. He's research analyst for listed equities at Impax Asset Management. Matthew, good to see you this afternoon. I mean, the market's very, very buoyant on this inflation print. Are they getting a bit carried away?
We certainly will see. I mean, it's a positive development for the UK equity markets. I think, one particular topic that is maybe a little bit left field, but we're discussing a lot is, the climate particular aspect of it, and extreme heat across the south of Europe, record-breaking temperatures in various different places. That drives a lot of non-energy commodity pricing as well. We think, there's some recent analysis that have shown that there's an inflation aspect to that particular to those particular developments that maybe the market doesn't fully understand, and it's something that we at Impax are exploring, and developing our understanding so that we can model and manage that particular aspect of costs and inflation.
OK, Matthew, got to leave it there, I'm afraid. Thanks for joining me. That's it from me. I'm back at 11:30 tomorrow morning with our morning edition. Hope you can join me for that. In the meantime, stay tuned. After this short break, Kimberly Leonard is up next. Cheerio.
Five of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.